Charts don't lie, but they do whisper, and only skilled traders knows how to listen. Today and in this video, I am showing you the best technical analysis method in crypto, the exact tools and setups pros use to catch high probability moves before the crowd even notices. Welcome back, traders, to this episode. This is FinSpoke channel. My name is Juliet. Do well to leave a comment in the comment section. Subscribe if you have not done so, and give this video a like if you want to see more of this valuable content. Let's get into the business of the day. Let's break down the 5-step crypto top-down analysis quickly before we head over to the chart. Now, the first thing you need to do is to look at the macro market overview. The goal is for you to understand the overall crypto market trend before looking at the individual coin. So you go to your trading view, look at BTC trend because it influences the market as a whole. Look at the sentiments like fear, using fear and greed index, the news, the macroeconomic events like interest rates, regulations, all these things affect the market. Then check the total market cap of Bitcoin. That's the first thing. Then you now check the total market cap, removing Bitcoin from it to know the strength of all coin. You can move over to use the weekly time frame because it will help you to spot the primary trend, either it is bullish or bearish, or that the market is consolidating, that is sideways. The next thing you want to do is to look at the sector or the category. Now, the purpose of this particular one is for you to identify which sectors are stronger or weaker. The stronger sector is where the money lies. The weaker sector, there's not much money as at the period of your analysis. The next thing you want to do is to move to the sector and the category. You want to identify the one that is stronger because the stronger ones is where the money flows in. That's where the money is. You want to make money in the industry, right? So the weaker sector doesn't have much money in there. Choose wisely. Choose a sector that is showing the strongest relatively strength in the macro trend. Your purpose for this is to find the strongest coin in the strong sector. Look for coins that are currently outperforming BTC and Ethereum. You can use the daily chart to confirm strong price structure. Like we all know the market structure, higher highs, higher lows. That's when you want to get into the market when the market is making high and higher lows. You don't want to get into the market when the price is flat, when the market is ranging, consolidating, or just moving sideways. That's when the markets keep eating from you. Check the trading volume. It gives a stronger convictions. Then the fourth step is to do your normal technical analysis. Stay with me. I will expatiate using a live chart in this point 4. Your technical analysis, the idea is just for you to identify the best entry and the exit point. You need to mark out your entry point. You need to look at the chart, the price chart, before you can take quality decisions. It's not how long you spend in the chart that pays you. It is the quality decisions that you make that pays you. From monthly, weekly, daily, you move down to the 4 hours. The 4 hours and the 1 hour time frame is where you look for your point of interest. Then you execute your trade. You can mark your supply and demand zones if you are using SMC, smart money concept, or your support and resistance. Remember, the higher time frame tells you the the trend of the market, the overall trend. And that overall trend is much more stronger than whatever you see in the lower time frame. You can use trend line, moving averages, or some indicators like relatively strength index, that's RSI, MACD, which tells you the convergence and the divergence of the charts and the indicator to confirm. Then check for the market structure, that structure break. If you are getting value in this, please get to the comment section, type crypto. Leave a comment below. Let the algorithm understand that we are doing something in this space so that it can push this video to the wider audience. And if you are not subscribed, please subscribe. Okay, number 5, that is the main thing. Your risk management. Decide the position that you want to use to trade. The risk per trade, make it fixed. Don't risk more than 2% of your account size per trade. Risk management is very, very important. Use the long and the short position in trading view to mark out your entries, your stop loss, and your target profit. Make sure you use stop loss. And if you want to mark out like profit, take profit 1, 2, 3, 4, 5, you can apply your Fibonacci retracement. And when you want to execute your trade, it is advisable you move down to the lower time frame, like 15 minutes and 5 minutes. It is the capital that you preserve that will bring you back to the market the next day. Let me show you how to do it using price action. This is BTC USDT. This is monthly overview of it, and you can see that trend is bullish. Your concern here is where the current price is. This is your resistance at the monthly time frame, and you can see that the current price is bullish. This is the current price. This is the key levels, the resistance zone and the support zone at the higher time frame. This is the weekly time frame. You can see that it's still bullish generally. That means BTC is generally bullish. Let me still bring your mind back to the market structure. At this point, a structure was broken for BTC to make this high here, to give us this high here. So that was the reason I mark here. This was formerly, it is a zone that was formerly a resistance zone, but now turns to support. Pay attention to it. This is your daily time frame. You can see all of this. BTC is what? Strongly bullish. If BTC is strongly bullish, that means most of other coins will be bullish. Altcoins will be bullish. What it means is that you will find more of buy opportunities than the sell opportunities. At these 4 hours, you can discover that price was formerly ranging between here, between this zone and this zone. And there was a breakout here, and it's actually moving up. It has not gotten to the resistance zone, but it is actually heading towards that direction. So we want to go to the 1 hour time frame to look for an area of interest. Using the SMC method, that is smart money concept, I want to mark the demand zone. This zone is where this price gets to, and it's expanded to the upside, breaking this structure. So it is expected that price will return back to this place before going up. It's expected that price will come back to this place before doing this. If you are good with your demand and supply zone, you will understand that before this expansion, price moved sideways. This is the base. You can check my video on 5 best technical analysis. I explain in details how this demand zone is being formed, demand and supply zone. You can also watch how to do top-down analysis. It's a detailed video that can help you understand this particular one more. I explain a whole lot of things in that video in details. Now pay attention. This is the resistance zone. This is a demand zone that gave rise to this price expansion to the upside. So it's expected that price will return back here to fill these inefficiencies here. Already it has mitigated part of this particular candlestick. What I mean by inefficiency is where there is just one-sided activities, which is the activities of the buyers without that of the sellers. So price is expected to return back to this zone to correct these inefficiencies or open prices that it left here. If you want to know more about this, watch my video titled 5 Best Technical Analysis. You will see I gave a detailed explanation on how this demand zone is being formed, how the supply zone is being formed, and how you can escape this trap, because this is an intentional trap for them to sweep liquidity. So price is expected to return back here before going up if it wants to break another, to create another high. That being said, look at this line I put here. This is trend line liquidity. Price is coming down to take out liquidity seated here. So if price is coming down to take out liquidity seated here, it will break this zone. It will not respect this zone marked here. It will not respect this zone. My best demand zone in this case is this. My reason is because there is an imbalance seated here. And upon that imbalance, there is a liquidity in a trend form seated here. So I expect price to come and sweep out this liquidity. I expect price to return back to sweep out this liquidity. This is what I expect price to do. Once it did not respect this zone, price will come to respect this zone because there are liquidities seated under here. That is why I expect price to return back here, not here. But in a short form, you might wait for price to return here. If it didn't respect this zone, this is the most freshly created zone. That's why I marked it. But if it didn't respect this zone, expect it to return back here. Before it tapped into the zone, it will take out this liquidity. So you take a closer look. You monitor this. What you are expected to do is to, when price tap into this zone, you know that the moment price tap into a zone, it doesn't move immediately. So once price tap into the zone, move down to your 15 minutes time frame and the 5 minutes time frame to find your entry. You already marked the zone at 1 hour. So you go over to 15 minutes time frame. When you come to your 5 minutes time frame, then price has already tapped into this zone. You come to the 5 minutes time frame to wait for a break of structure. When price gets to this place, it will range a little bit at this place before moving. So you watch what price does. It might give you a reaction to tell you that it's going to the upside. Then you take your position and execute your trade. Manage your risk. That's the most important. The capital you preserve today is what will bring you to the market tomorrow. If you have gained value in this video, don't forget to like, comment. Please, that your comment is very important to me because that is what will make the algorithm to know that we are doing something in this space and be able to push this video to a wider audience. Subscribe and share this video. Let every crypto traders, especially people that are struggling on how to trade in crypto, let them watch this video. Technical analysis is technical analysis anywhere. Don't let anybody deceive you. It is same in forex, in futures, and all. The only difference is how a particular asset behave. I wish you more success. See you in my next video. Thank you.